Hey, good evening, guys. Ken at Tortoise Capital coaching session for February 23rd, 2026. So a quick check-in. All is well here. Just working hard in the usual way. And let's go in the order in which I see you. Sam, how are you doing?
Doing well. Wish I had better news to report from today, but my spirits are good.
Ashay?
Same, same. Yep, I'm doing well. Swing trading still, a little bit of a drawdown, but kind of expected with the market type and the longs and shorts. So it's good.
Juan Carlos?
I'm doing good. I'm excited working on my little project here. Well, it's turning out to be a large project, but it's very enlightening on whatever was going on before, and it's good. I'm excited and happy to wake up and continue working every day. So it's a good thing.
Okay, nope. Sundeep?
Um, Doing really well. Last week we had some lovely winter storms here, and at the first sight of a storm, the goes out. So we had like 2 days without power. So
Yikes.
that's fun. But other than that, all good. Today it's nice and sunny.
Cool. All righty, fellas. Let's go ahead and jump into your stuff and try to focus more on you today than my commentary. Today, the only thing I'll say the swing trading one day at a time candidate Cisco gap up, rolled over, and collapsed all day for a smooth collapsing dragon series. I'm liking that technique of picking the one that has the best one day swing value. That's 4 or 5 days I've been running it, and I'm pretty happy with that as a focus. So I can cover that later. All right, who's up?
I'm happy to jump in and get me out of the way.
Okay.
It'll be relatively short. I am a little bummed at this point. I was on such a furious tear. Actually, I will go to, well, I can stay here for just a moment, but my goal is 20,000 for the month, and I was at 16 at the end of almost 17 at the end of last week.
Yeah.
And I have like this is the extreme trends. I've traded sleep deprived the last 2 days and probably should learn that lesson sooner than later. But I took some trades that weren't, you can see I had been on such a tear. I was so excited to share the furious
Yeah.
progress. And so I've got a little bit of a drawdown, but today all of my trades broke even, and I should have walked away at a 0 day, and instead I hit my loss limit trying to trade a strategy that wasn't my core strategy. So um, don't have anything else to report, but I will learn this lesson. I'm very close. Like this is the final lesson. I feel like
Well, the final
it's
lesson of this week.
of this week, but it's me. Like as soon as I can
It's the next lesson.
yeah, fair. As soon as I can solve me, I feel like the equity curve's going the right way. Anyways, thank you guys.
Yep. All right, next man up.
I can go.
All righty.
Um, so in the past week, I was stabilizing the system, collecting my trades, the system trades, the strategy trades, and linking and finding the positions and all that kind of good stuff. So while I took a lot of time debugging, I got some starting to see results now. Um, the strategy is it's not fine-tuned, it's not doing good. I'm just collecting the trades right now. I'm still trading one share at a time, and it's a pretty bad average. I'm on a 26% winners. And so it's starting. This is the data of 2 weeks of data. Someplace I also have how the strategy itself has been working. The no, I should share the screen, not Excel. Uh, So this hasn't, sorry, Excel has the two same names. Well, that's what's happening. So save as, sorry about that. Save a copy. Let's put system. So, one of the good thing I didn't mention here, my good symbols are DIA. It's always a good one, and SSO. Today had a humongous trade. I don't know, it was almost a 4R. And so those are the two winners. The AI ones, no bueno. And now the system on the IA itself, the strategy, which I'm measuring too, is another story. Well, actually, it's pretty close to 0.244 on the average. And on the real-time trades, we were looking at 2514. I'm off 1 week, but that's good to know, and that's good to see.
Yeah, I mean that's like a 0.4. That's a 4% variance. That's pretty close.
Yeah, so I guess that's a good thing. So my whole point of all this project is being able to see this almost or close to real time and come down to my expectancy graphs per symbol, per strategy, and knowing when to stop, when to start. And at least that's the first iteration.
Yeah.
So that's it. That's where I'm at.
Yeah, I mean the coin flip looks good. The payoff looks good. Keep marching.
Yes.
Okay, next man up.
I'll share real quick. I don't have too much to show, but I think one of the lessons to learn from me is probably to be a little more selective. I have a lot of alerts on and positions on. They're long and short, but after something's in a compound critical state and I turn the alert on and it trades it one way, sometimes I'll leave it on and um, maybe I'll catch the reversal, but then other times it will just go into somewhat of a sideways, quiet channel, and then it might take some losses there unless the ADX keeps me out. So let me just share. I'll share my screen here to show a couple of what are positive trades right now that are on. Let's see here. Okay, you guys can see my screen.
Yep, got it.
Okay, all right. So I've turned off the main strategy, um, just so that so it's not too busy of a chart. This is LINDE, and it took uh, first position here, second position here. So this is the average price right now,
Yeah.
and it just it's working kind of
What
kind
is
of
what
nice.
does Lindy do?
I think they're in some sort of medical space, I think. Let me see.
Okay.
I think they're in chemical specialty.
Okay.
Yeah. Let's see here. mRNA. I think this is a newer position. It's about $20 position sizing R, 2 ATR stop.
Yeah.
Um, so this is kind of
So
where
where's
it
your
ended up
stop
getting
on
in.
where's the stop on that one?
On this one now, so I'll turn on the strategy. It's going to be trailing the PSAR at this point.
All right.
Um,
My
yeah,
recommendation on that one, just from
yeah,
tactics, would be
yeah.
the low. It would, let's see, what is that? That's 2 hours. I think I'd
Yeah,
go.
I'll
I'd
zoom
be
in.
tempted for the 2 day low rather than the PSAR on this one. Uh, you see where the gap up is?
Over here.
Oh no, wait. Maybe it's those are 2 hours. That's four per. Wait, let me draw it.
Yeah,
Let me
sure.
just draw
These
this.
blue lines is each day, the
Yeah,
vertical
that's it. Yeah.
blues.
Let's see.
Yeah, and I
Date.
think the PSAR is about here at this point.
This is one of those where my intuition is you would be psychologically better to have it here rather than here. And the reason being, if this thing were to fail through here, there's no reason on earth for it to stop in this area here
Mhm.
because it's a gap. So when this actually collapses, the expectation would be immediately drop to here where it would hit your stop. So there's no like extra layers of expected buying that would come in here. So if you're going to get out here, you might as well get out here. You see what I mean?
Yeah, I see what you mean, but the trailing stop right now is up here at this
Oh, I'm
point.
sorry.
So this is
I
just
thought the red line. I thought. I'm sorry. I thought the
yeah,
red
no,
line was.
it is it's the stop from the original position. So once it hits 1R, it will move to a point 0.2 stop loss on the initial position.
Yeah.
But then once the PSAR is above that, it will start to trail the
Oh, okay.
PSAR.
Okay. Never
Sorry,
mind.
I wasn't clear about that. Yeah.
Never mind.
Yep.
So the
Okay.
stop is actually here.
Yeah.
That
It's like
looks
right
like a
there.
good. Yeah.
Exactly.
Yeah. Because
Yeah.
that forms like a shelf right here. And so what I was going to say, if you wanted maximum room for that thing to run, because it still has to get above this cluster right here, which is this. So that's going to be a lot of indecision based on how much negativity there was in the U.S. market. So there will be a drag on that. So the logical places to preserve would be, I was going to say the 1 day low, which is close to where that PSAR is, below this shelf if you wanted to give it a chance to hold inside here. Otherwise, this one. But yeah, I thought this red line was the stop, and that's too far away.
Okay.
So yeah,
Yep.
yeah, this looks good. That looks like a good stop. That gives it enough room. Plus, if it doesn't hold, then you'll come out of that with a decent return for a short duration swing.
Right.
Okay.
And I'm starting to just test. It's not live right now, but just test adding in at about every half an ATR. So it's a 2 ATR position sizing stop, but then kind of scaling in more quickly if I'm on the right side of this is the 30 SMA, this big golden thing.
Mm-hmm.
So I'm testing the RL10 crossing the 30 SMA and then taking trades on that side and
Mm-hmm.
pyramiding in.
Yep.
Um, so what was not an Adobe? I think there was a good short one to show. It might have been IBM that ended up catching kind of the collapse. It's just one
Yeah.
share
Yeah.
got short right there.
Yep. Sure.
This is that
Collapsing
2 ATR
dragon
position
on a
side.
disastrous day.
Yeah.
That's always going to do good.
So that
Yeah,
that
and
did that.
IBM, if we look back at the weekend chart, last week there were three techs that were just getting smashed on the blended monthly rebalancing chart. That's combining the 3 and the 6 month, and that was IBM, Microsoft, and Palantir, which I consider to be new tech, and ancient tech, or like new tech, old tech, and ancient tech. And last week, Palantir, after they had all sort of washed out, Palantir was up 5% last week. Microsoft was about flat, and IBM was down about 3%. And so this is just a continuation of the decline of ancient tech. Like everybody has to own Microsoft for some, reason or another because it's so large and you got to put your tech money somewhere, and they have a large AI presence and they have a cash flow. So there's reasons why a lot of fund managers have to own that. Uh, it's a big part of the indexes. So the indexes have to own it. Everybody that wants to be cool and groovy and hip have to own Palantir. Nobody has to own IBM. There's nothing about IBM that only IBM can offer anymore. They're just another consulting company and with a name and very little else. So on a day when the market collapses and tech gets smashed, it's not surprising that IBM is not going to be the one to buck that trend. It's the easiest one of those three to sell. So actually, going forward, that's a reasonable, not a pair trade, but a trio trade or something. That's a way to think about those three and a way to think about IBM. Take a look at the last 2 weeks there in IBM. Anytime there's a decisive move, it's down red big time in 2 hours. There's four smashing down moves in that. And the up moves are trivial. It's almost just like maintenance buying. So there's no buying interest in IBM. And so as a one-day look ahead, if I was going to be prepared for a tech stock to get slaughtered tomorrow, you couldn't persuade me that IBM's not a good candidate for that, right? So
Yeah.
that's just a piece of market context and sector context going forward. But yeah, that's a good trade. It's collapses below the previous bar and just bam. And lots of volume too. I mean, lots of volume there.
Yeah. So there are a handful of other ones similar to that, but I think what I'm going to do is review them a little more judiciously to, when it starts to get into this kind of a pattern, maybe to have it off, box it off, and then make the strategy so that to go short, it's got to be below the box, and to go long, it's got to be above the box with maybe an ADX filter. It's kind of what I'm thinking about right now. So that's kind of where I'm at.
Yeah. I mean, a box of this size, like right here, looks very much like that's just the bots trading back and forth. That's that wouldn't surprise me if it was like an R5. Or maybe even a frog, but less than so that's about I'm trying to do this by inspection here. That's about $8. It's about an $8 width box.
Yeah.
Let me see if I have IBM in here. Just want to check his stats real quick. Because there's something about the size of the horizontal consolidation box that when it's a frog box or less, then it just feels like there's no human activity involved in that thing. Let's see, IBM. Yeah, so let's see. Range stat. Yeah, the R5
I might have it
is
here
3.5. Range stat. Come on now. Talk to me, Johnny.
It might be $17
ish.
ish, 17.22 for the range stat, and the frog box might be $5.
Yeah, so that's right around.
Right.
That's just a little bit larger than a frog box. And if we say the frog box is the difference between signal and noise, then that's pure noise that consolidates. So it's to your point about waiting for the breakout of the noise box is essentially if you were to take the 50-yard line in there, the horizontal midpoint,
Mhm.
and then straddle that with a frog box, you'd probably see something the same size as that yellow box. So you'd have, if that's the center line, and you put a frog box on top of it, then this breakout or that breakdown is in order. And especially the longer this goes, the more interesting the breakout in either direction is. Okay. But I
Easier
just
way
think
to make
I
it
think
more
that one's in play.
mechanical. Yeah.
Yeah,
Yeah.
that's going to be in play tomorrow. What I would love to see would be like a big gap down, and then I'll bracket that with an R5, and I'll play this or I'll play that right from the get-go if there's a gap. And if there's a gap up, I'll do the same thing. A big gap up, I'll play the breakout of a R5 box in either direction. So
The 10-minute on the
no,
10-minute typically,
right from the opening.
right from the
If
open.
there's
Okay.
a significant gap on this rascal,
Hmm.
then like more than an R5 box away from the close.
Yeah.
If by inspection it looks like, oh, that was I notice the gap, then I put an R5 bracket on it and play it in either direction right from the opening. But if it opens right where it closes, then I want to see a 10-minute move. All right. I'll say
Okay.
that again. I'll say it again.
Hmm.
If it opens approximately where it closes, like trivial gap, then I'll wait to see, maybe it opens here. And I'll wait to see the 10-minute move. And then I'll put the breakout box around the 10-minute move. And then I'll play the OR10 in that case. What normally will happen is that the OR10 candle closes with price very close to either the high or the low. It's moving in that direction. And then the second bar just keeps going and boom, I'm in. But if there's a
Okay.
gap, what that means that there's a lot of energy to process because of the overnight news. So it's going to move right away in the direction it's moving. So I'll put the R5 box on it right from the open, and then I'm ready to go immediately.
Right.
But if there's no gap, then it's got to find its legs, and I'm going to give it 10 minutes to process. And then after 10 minutes, I think we start seeing the move of the day. And that's why I play the OR10. But if there's a gap that's different, that means that there's a lot of energy and it's going to become directional right from the opening. And that's why I put it's almost like the gap acts as an OR10 in some ways. Not
Mm.
quite true, but if there's a large gap, wherever it opens, quick box and break, and it may go in the first minute. I'm not waiting
Right.
10 minutes. I'm not waiting 10 minutes after the gap, after a big gap to try to get the directionality. It's either going back to close the gap or it's going away from yesterday's close.
Mm.
And I want to go in the direction that's decisive right away. And by decisive, I mean it breaks out of the R5 and R5 box.
Right. And then you're getting to no lose as quickly as possible because those
Yep.
can quickly
Yep.
reverse.
And then it's just like now it's a science project.
Yeah. Okay. Thank you, sir.
Mm-hmm. Sundeep, what you got?
Um, I don't have anything to share. I'm sort of getting into my own systems development after a long time, so it's kind of down the rabbit hole. But I'm excited. I've wanted to get to more systematic trading after doing discretionary trading for a long time, and I feel like I have sufficient knowledge and experience under the belt to be able to do something. So
Yeah.
I'm starting that, but it's, as I said, it's a rabbit hole. I've got a lot of help from the AI, which is fun. I've sort of maxed out both plans on Claude and Google, and I'm still getting having to wait for timeout. So but it's fun. So I'll share something in a week or two, but I feel what I'd like to do is to automatically compute signals. So there are lots of systems, lots of signals, but to me, I want to find out what signal and what system is in play right now. So what's the regime? And so hopefully I can get some good outcome there. I don't know if that'll work out, but that's the plan.
Is good. Let me see if I can share let me share one here. I just want to talk you through my trade from this morning. Let's see, where's my share button? All right, let me know when you can see that.
Not yet. See it now.
That's not the one I'm looking for. That's Cisco. Yeah, Cisco. All right, can you see Cisco there?
Back.
Say again?
Yes. I can see
Okay,
it.
yeah.
Yeah.
So Cisco was the number one on the swing frame of the day. And what I'm doing on that is similar to what I am doing with the intraday frog trading value thing, if I can say it that way. See if I can, let me pull that up so you can see what I'm talking about. Let's see. Oh, I closed the one I wanted. Tag comment. Well, this was the Cisco was chosen because it had the highest combination of the reward to risk ratio back to the 10-day high. So that's just the auto framer. The auto framer reward to risk takes the reward as the 10-day high minus the size of the risk box, which is the daily bar. So the way that gets calculated for the auto framer visually was this was Friday's box in Cisco. So that's a daily chart, checker hold. And this is the 10-day high up here. Okay. So the auto framer simply measures how many of the daily dojis, if you will, can be found between here and a retest of the 10-day high. So in this case, these boxes were the size of this risk box. So that means this was somewhere around 8-1 on a 10-day high. So this was also the trade of the day when it was back here. It had just had that same 10-day high sell-off and had sold off this much. And then after this little harsh sell-off and a rebound, it closed inside a really tight doji. So that gave something about like 9 or 10-1, because if it broke out from here, we would go long. And in fact, that thing did get long, and it went up through here, and it was still going well. And this was a tradable day intraday for like the sniper trade of the day. This one was tradable intraday because it opened at the low of the day and had some kind of move during the day. So there was a way to get something out of it. But this was actually still a valid 3-day swing that was underway. Checker hold. And it just so happens that the size of the doji on Friday was so small that it still offered 8-1, which was better than any of the other symbols in the auto framer. So that's good. Now the next thing that I compute, so the one thing is the reward to risk. And then I multiply that by the let's see, what do I multiply that by? Oh yeah, the range stat divided by that day's range. So in order for that to be large, what you want is you want something that has a large range stat, meaning its normal volatility is large, and you want the daily range to be small. Now, the same thing that gives you a good reward to risk ratio on the auto framer is included in that. It turns out that anytime you have an abnormally small range today, that's going to make it attractive for breakout trades tomorrow. Like there may not be a lot of room inside the yellow zone to trade it, but if it breaks out of a small range, then you could imagine if this was 2-1, where the range stat divided by the range was 2-1, that means today's range was only half of a range stat, which is usually much smaller than average. So when you have a large auto framer and a favorable range stat divided by range, that means this thing is ready for a 1-day pop, meaning it had such a tight little doji that if it breaks out and if it just goes to a range stat, then you have a chance still to make a nice move because the compression of the day before was so great. Does that make sense? Thumbs up on that? Okay. So it turns out that Friday, Cisco had the best score on that. So that was the one that I framed up. And the way that looked was like this. Now, there's going to be a couple ways that I could trade that as a 1-day pop. What I want to see it do is open inside the yellow zone. If it opens inside the yellow zone, then I could just wait for it to break out of the green or to break out of the red and just use the full size of yesterday's range as the risk box and just treat it like a mechanical entry for a swing trade, but trade it with intraday size. And then somewhere in there, get it to no lose plus dinner for two, cash 80 or 90% when I'm satisfied with the daily move, if I want to keep a piece of that trade overnight. And that way the day trade pays for the swing trade. Kind of clear on that? If, on the other hand, it gaps above or below that range from Friday, then I know that that's going to be an extreme gap anyway. And what I'll do is then I'll put that R10, I'm sorry, the R5 bracket on it, whichever way it is gapped, and then I'm ready to play the breakout in either direction. If it gaps up and then just keeps going, I want to be on board that right away. If it gaps down and starts failing, I want to be on that right away. If it gaps down and then starts reversing, I want to play it back to the previous close. If it gaps up and then starts failing, I want to play it back to yesterday's close. So those are the ways that I will typically trade that intraday based on whether or not there was a gap. For me, the best is always let me see it open inside the yellow zone, and then I can just take an orderly move once it leaves yesterday's range. That's my preferred kind of method. Check or hold. All good? All right. So let's see if I can, now let me find. So this is now today. This is now Monday on Cisco. So Cisco closed here, and this blue box is the last 30 minutes of Friday, and the close was like right here. What it did was it gapped down, but it was still inside like the last 30 minutes. So I consider that to just be an orderly open. So I wait for the green box is the OR10. So there's the highest high of the OR10. This is the lowest low of the OR10. It opens here, pushes all the way to the upside, comes back to here, opens here, sells off to about here, opens here. Now it's in here. Now at this point, let me shift this over so you can see. Right here is where that thing breaks below the OR10. Check or hold. So that's where I want to get short. And then I will pick as my stop. On this one, I like to just go with the, oops, sorry. I like to go with the top of the PSAR, which in this case, and always is the case, is the same place that the RL10 reverses. So I feel like that's the price level for today. It has to break through that level in order for this thing to really go. So instead, it fails here. I got my stop in, and that thing just collapses. Now, you can pick whatever Hogarth press strategy you want to add positions. I leave that to your discretion. Where are some places that look natural? Right here, right here, right here. When that thing comes down and pulls back up, I'm on high alert because maybe that's it. Maybe that's it. So I'd have keep 70% from the current low. This thing rolls over and gives us another whole leg down. And so now the low of the day is here. And if my entry is here, if I'm just using the keep 70%, that's the gain right there. There's 50%. There's 75%. So my keep 70 is approximately where the PSAR is. Check. Or I can just take a 1, 2, 3, which is right about here. So either the keep 70 PSAR or a 1, 2, 3 exit once it clears the dragon. Either one of those exits is legit. And then if that's 1, then this is going to be about 1, 2. That's about a 3R on the first position. And then those would be fractions. So maybe 2R and 1R if I was able to get both of them. So that could be anywhere reasonably from a 3 to a 5R trade, depending on how much it gave back in here. So that's the approach that I'm taking with the swing frame of the day. So there's 3 ways that I want to trade that, or that I can trade that. One is simply I identify yesterday's range and I just say, look, I want it to open in the yellow zone, and I'll play it as a breakout trade, as a swing trade, and leave it be. The second way I can trade that is to say, if there was a gap outside of the last 30 minutes of the day, I will often just use that. Like if it had gapped up to here, I'd put an R10 or an R5 bracket on it and then play the breakout either way. The other way I can do that was if yesterday's last 30 minutes was large and it opens inside of that 30 minutes, like it's so close to here, but it morning hooks and starts going that way, I might just use that as the low of the day, put half a frog box on it, and half a frog box on it here. Use a frog box for position sizing, but use the working low of the day as my actual execution stop, so that if I get long on that, if I get long somewhere in here and then it rolls against me, at most I'm going to take a 0.5 loss because I'm using a frog box for position sizing. Now, when you listen to the Sunday session and you listen in on Luis, he went into second. He was a second briefer. What he does is something approximately like that, but he's using like a full ATR or even two ATR for position sizing. He's taking the tactical entry and he's taking like an execution stop here or here, and he's moving that to no lose plus dinner for two fast in order to take away all the anxiety of that as an intraday trade. His position size is small because he's using a large risk box for sizing the position. So he has no worries about damage to the portfolio. What he's really doing is trying to build the muscle memory of getting used to taking this entry and then moving a stop to no lose plus dinner for two, and then managing the stop. Here's how he's managing the stop. If his entry is here, oops, sorry, that should be green. If his entry is there and his stop is, his position sizing stop is far, far away for a 1.0, and his execution stop is maybe like a 0.3, that could be like a frog box, And if he takes a full frog box loss, which in many cases is 3 R10s, even if he takes a full frog box loss, the loss is only 0.3. So now we've taken care of the risk anxiety. So that's going to be his execution stop. That's going to be his position sizing stop. And now the thing is moving in his favor. Sorry, that should be blue. Now the thing is moving in his favor. And here's what he's using to evaluate his exit strategy. He knows that when he's at 0.7 in hand, that he really wants his stop at 0.2. And that way, he's only really got open risk of 0.5. Check or hold. When he is at 1.0, he wants to be at about maybe 0.5. So again, he only has about a 0.5 of open risk. And when he's at 1.5 in hand, he wants to be at 1.0. So again, he has about 0.5 of open risk. And when he gets to 2.0, if he were to be at 1.5, that's keeping 75% of his open gain. So those three checkpoints are a way that he can independently evaluate the quality or the efficiency of his rule set. Oh, by the way, that's also something you could just program as a function of the highest price while in the trade. The instant you got to 0.7, you could just tell it, move my stop to 0.2. You don't even need to see the chart or the pattern or an indicator. the simple price movement alone could move that to 0.2. If it's not too offensive, you might just say, you know what? If I just trailed it with a 0.5 all the way up to 2, that's one way to hit each of these checkpoints. At 1.0, your stop would be at 0.5. At 1.5, your stop would be at 1. At 2.0, your stop would be at 1.5. You know, survey says minimum cognitive complexity. At around 2.0, you have reasons to believe that the tactical trade has moved in your favor and it's continuing to go up because guys at higher time frames are responding and adding to it. It's like your day of decision is over. Your fog of war is over. And from the time you get to no lose plus dinner for two, or like at 0.7, you could turn off the chart and take all of the energy that you're using to tweak individual stops based on chart reading and all that, which I enjoy, but it takes effort. But the more, you know, the less you spend thinking about how to move that stop, the more energy and time you have to spend on finding the next trade that meets your uh, uh, all of your criteria without any shortcuts. And so if you have a trade moving and now it gets to 0.7 and off it goes, and then 10 minutes later, another thing has bottomed out and started to go, chances are those things are not correlated. Maybe they are. Maybe this was the first one and this is the second one. I don't know. It depends what the symbols are. But you could spend your time ensuring that you got the entry you wanted, the stop to no lose plus dinner for two, and then turn off the pardon my language, turn off the chart. And then your exit is keep 70% of the maximum excursion or exit at the close. If it never hit your kept 70%, then that's been when you go back and turn the chart on, it would be a really good move. And you didn't have a chance to second guess yourself and get out of the trade. What Luis noticed was that when he went back to all those good days, he was getting better returns when he ignored the move once he got to no lose plus dinner for two. And the reason was when he was dialing it down to the shorter time frames, he had an itchy trigger finger and he was talking himself out of positions. So his average win was better and his R multiples were better just by turning off the chart and trusting those simple mechanical rules. And that freed him up to look for other opportunities. So I would invite you to listen in to 3 very good discussions from yesterday morning. One of them was with Hamad as he's working through his stuff. There was some really good work on his patterns. And then Luis had some ideas about his exit management and his visioning of his trading metaphor. Let me call it that way. He's a deep sea fisherman, and what he's working on adopting is a mindset that says when he goes into the ocean to deep sea fish, he's got 3 or 4 fish that he has in mind that he's prepared to catch, but he never takes his eye off the ocean state, and his boat is always seaworthy before he starts fishing. So he's ready for whatever, I don't know, sailfish or whatever these guys are hunting for. I figure if you go out in the ocean, sharks are hunting you. You're not hunting fish. That's just me. But when he goes out and he's looking for the ocean fish, he's got 3 or 4 that he's planning to try to catch. He's ready for them, well prepared. But he's always watching for things that are happening. Oh, I wasn't planning on that fish, but these fish are jumping and I've got the kit and it's my standard pattern. Maybe I'll just trade them. but he's also watching the state of the ocean, the market, to see how it's influencing what's going on. And if you were watching SPY at all today, you would have seen exactly this phenomenon, a little bit of initial strength and then just the Trump effect and the 15% global tariffs as a knee-jerk reaction by a petulant child. So more of that's coming, not less. So that's what I want to say about that. So yeah, anyway, that video is uploaded now, and in the coaching session in the usual spot. So that's all I got for tonight. Any other questions or comments?
Yes, I have a question.
Yes, sir.
A couple of charts up behind, when you were talking about the doji and the yellow section,
Yeah,
the bar before had a similar situation,
yeah,
but you selected the next bar.
right.
I've been after,
Yeah, the day before, Cisco was like in the second or third position. It was still pretty good quality for a swing frame one day at a time, but Google was better. I mean, Cisco was like the second or the third best, but the Google chart was much better because its 10-day high was further and it had a micro doji. So it just happened to be a better ratio. Cisco was certainly tradable. Cisco was on my short list anyway, because the first time last week that Cisco fired, it led to a good intraday trade and a good swing trade, which was still open. And then Google came on board, and it was a good one-day trade. And then Friday, Cisco triggered for a trade today. Silver was also in there. So last week, the symbols of interest were, sorry, I think it was around what for Wednesday, Thursday, and Friday was like, uh, if I remember, Cisco, Google, Silver, and then Friday it was Cisco again. All three of those symbols are still in the middle of a really interesting swing move. So one of
cool.
the things that you learn, one of the things you acquire is uh, when you get those good swing signals, they can last. That initial abnormal move away from a height and then the elimination of volatility, so really tight dojis, that that little reward to risk ratio can last for a week. So it's not just one day and it works or it doesn't work. You can actually use that to kind of build your short list of things that are still of interest.
Cool.
Now,
You,
now the
Mhm.
third briefer on that uh, was Alexi, and he was asking. He wants to primarily focus on swing trading, and so I described to him a strategy to think about swing trading with three different conceptual systems, so that any one of those three should always be doing better than the other two, and it should be well aligned. One of them was like reinforce the blended monthly rebalancing. So generally an upwards market that's grinding, hopefully, and you find the relative strength leaders long term, and you look for opportunities to frame kata twos in the usual way. So that one is sort of that's aligned with everything that's ever been written on trend following with relative strength leaders and momentum. So that one kind of just briefs itself. Um, that's one where, hey, 6 months ago, silver started to outperform. And most of the last 6 months, it's been an interesting long side swing until about 20 days ago when that thing collapsed. And now it's not a good swing. It's a really good intraday, but it's not a good swing until about 3 days ago when it has found its natural level and is starting the next next leg up. So it's actually in a kata 2 state if you look at it on the 3-day and the 9-day. So silver and gold are now interesting once more, particularly when you have the U.S. sucks. The U.S. sucks trade, right? So that's one system I talk him through. The second one, I should say, that first one has swing trades that could last 5 days, 10 days, 30 days, could be a series of swings for 3 to 6 months. As long as that sector continues to outperform on the long term, then it's still got relative strength and it's easy to believe in. The polar opposite of that is the supported spring crossing trades that appear on 3-day and 9-day charts. When you look at those, you're looking for things that have to have institutional ownership, like countries, the Microsoft, whatever. So you wait for that thing to have an abnormal sell-off that has stalled, and now the RL10 has reversed, and now it just looks like a standard supported spring crossing, but with a 3-day bar. And now you can pick the size of your stuff. By the time that were to cross the dragon or do a PSAR flip, you've got at least an ATR, maybe even a 2 ATR natural stop, and you might have 8 to 10 ATR back to its previous uh, before it started to collapse. So that's a simple buy them when they hate them, or a winter, spring, summer, fall, almost like a MACD Four Seasons kind of a trade. And then that thing is harder to believe in because of the recent sell-off, but there's a margin of safety built in because of you're buying quality on sale. So that's the reason you could be back in silver now on that, and Google on that kind of a trade. The third trade is one in which we're taking short-term sniper opportunities, like I'm describing with the swing trade 1 day at a time, where you have a tactical sell-off, or you have a mechanical swing system that fires a frame, and you can qualify that trade on the basis of reward to risk, and then you could decide to trade it purely as a mechanical entry, or as an intraday only, or as a combination intraday and core. So there's, in the same way I was describing how I could trade Cisco tomorrow, you could find your way to trade that third system. So we called that system 1, system 2, and system 3. And my counseling to him on that was, it would be good to code his rules for what he wants to try on so that he could own the rules, and then have an accountability partner with Luis so that each guy forms the coaching eye with the other and holds you accountable to the rules that you establish. For that guy to hold you accountable to your rules, that means you have to publish your rules for him to understand so that he can judge what it is that you're doing. So there's a forcing function in there to get to completion on the rule set that you propose to follow. Now, while you're doing that, you're both developing the coaching eye. You're listening to the good ideas of each other. You're learning how to give good, humble advice. And you are creating some tactical distance between you and the trade, because you realize I'm just evaluating the ability to follow the rule and getting a data set about the rules. It's not who I am as a person. It's simply gathering data to evaluate the rule set, and then I can use data to adjust the rules. I'm still a good person. I'm a good person regardless of the results, but I need to give the rules room to work and make my decisions on the basis of data. You can trade it with one share. You could paper trade it and just follow the portfolio and make the decisions you're going to make, and then have the other guy help you with your accountability. That is 1,000 times better, for example, than watching me trade, because I'm not trading your rules. You watching me trade is staying between you and the completion of your rules. So complete your rules, have an accountability partner, cross share the rule sets. You can do that on swing trading much easier, obviously. If you're It's hard for a swing trader to evaluate a day trader, and the timing is just odd. But that was the substance of the guidance that I was giving those guys yesterday that I think are worth listening to. The first about 30 minutes of that had to do with some AI insights that I came across. I was working hard on putting together a program for Army leaders to field AI in the world in their organization. And I was creating the infrastructure for a critical thinking assistant in AI to make sure that I was not being captured by the first good idea that it gave me, and then using confirmation bias to only find data that affirmed my opinion. So we're using the analysis of competing hypotheses approach, which says start off with a wide set of possible explanations. List all of the assumptions that are required to be true for that hypothesis to be true. Now gather data and confirm or deny all of those assumptions. As you start ticking them off, if you find something where, hey, that hypothesis cannot be true because these three critical assumptions are false, then I can take that off the list. What I end up with is a set, or maybe the best, most robust explanation of the data, rather than finding the first thing that sounded good and chasing after that. In complex circumstances, the best solution is not always the first thing in the door. Sometimes in complex circumstances, we have tentative problem frames. And so we may have to adjust that as we try to figure out what's the real boundary of this problem? What's the solution space? Do I have to expand or contract that? Is this just a day trading problem, or is it a swing trade? So as you're searching for a problem frame that seems to fit, it's not always the first thing that comes in is the best, but that's where your monkey mind wants to go. So as I was working through the framework to turn that into an actual system, it ended up giving me about a 200-page book with 25 chapters about how to set up the analysis of competing hypotheses. And I said, hey, that's awesome. And I said, what am I supposed to do with a 200-page, complex, detailed, convincing, confident answer, since you just told me, AI, that the time that you need to suspect AI is when it is detailed, complex, confident in its recommendations, and say, yeah, you're right. You passed my test. You really learned the lesson about being skeptical, especially when I'm detailed. And I said, are you just saying that because it's true, or because you're doing what AI is known to do, which is to try to be pleasant and affirmative to a human? And I said, well, yeah, you got me again. It could be, so we kind of just kept going, following that trail of tears till I had about a 400-page manifesto, which ended up in the position of saying, when you're working with your AI partner, you must always remember that it is a mirror of your own making, and it is not an embodied living organism with consciousness that's giving wisdom from its thoughtful reflections about its life. It is a computation probability machine that has millions of possible response frames to give you based on what you asked for, and it's a probability machine. So in matters of the brain, when you're working on rational concepts, you can actually use it with great detail to explore your ideas from different perspectives, but it's always your ideas and always the perspectives that you've asked for or programmed in, and the final judgment is yours. That's matters of the brain. But in matters of the heart, which deal with values and emotions and ethics and things like that, especially then, stay with your intuition and your own personal reflections and don't offload responsibility to a probability machine, which is not coming from a place of lived experience, but it's simply pattern matching. So that became a about a 400-page manifesto about how to properly engage with AI for the long run to make sure you don't get captured by the first couple ideas that it gives you. But secondly, don't let a series of good results persuade you to start trusting it more. You should always have sort of a zero trust verification protocol all the time as an independent new case. It doesn't have momentum, like it doesn't get hot streaks to get rid. So anyway, you will hear that discussion at painful length on if you listen to Sunday. That's about the first maybe 40 minutes of it. So if you want to jump to Hamat, so there's 4 conversations in there. There's the AI discussion. There's about 20 or 30 minutes with Hamad, about 20 minutes each with uh, Luis and Alexi. So I mean, I think they're all worth listening to, especially. But you could hustle through. I've given you the executive summary of the AI piece. That whole manifesto and all that stuff is already uploaded inside the 5 frames as a piece of guidance to help it remember. Don't forget to be critical. It's already posted in there for for our protection. All right, that's now that's everything that I got.
Cool.
And
Thank you.
going once, twice, 3 times. Get some sleep, Sam. Do the right thing. Forgiveness and gratitude. Better to learn it now than later.
Thank you so much. I'm embarrassed to tell you what I did, but I got a book on traditional Chinese medicine with acupressure,
Yeah.
and I drove some vibrations into some pressure points that had my heart racing all night. So I can confirm that traditional Chinese medicine definitely works, and you can definitely kind of screw it up a little bit,
Well,
but
here's something you can try with your for your sleep quality. There's some pressure points in your hand. And for about $10, you can get a little egg
hmm,
that will vibrate on a scale of 1 to 15, little electroshocks to the palm of your hand, but you can close your hand on it. And just that little trickle charge will distract the random noise generator in your head and will keep you in a deeper sleep longer. And then in the morning, if it's not in your hand, just find where it fell
yeah,
to. But it's like $10.
I might.
My wife was pretty sure I'm nuts on that, but
Cool.
it's a little hand egg sleep therapy buzzer or something like that. Yeah, it's kind of interesting.
No, I might look it up. Thanks for letting me know. And yeah, just I have new respect for the power of that and to be careful.
Yeah, well, it turns out you get so many pressure points on your hands and the bottom of your feet that you can actually get some. Like I actually have a little red light therapy and uh, rotating ball massager for the bottoms of my feet too. I freaking love that. It's a shiatsu foot massager that's
Oh,
heated. Oh my God, do I love that. Red light, the ultra red light therapy with a little heating element and the rotating balls. Man, uh, I'm I'm
oh, very
hungry to
cool.
get back on it right away. Right now.
I just got
Feels
some
so
red
good.
light. Very cool.
Yeah. All right, fellas, take good care
Right.
and we'll see you soon.
Right.
Take
Yep.
care.
Guys.
Thank you.
All right, everyone.
Night.